Washington state homeowners are being crushed. Imagine this. You buy a home in 2018 for $315,000. Fast forward just 7 years, and the government now says your home is worth over $615,000. Nearly double? Sounds great, right? Wrong, because along with that paper wealth, your property taxes and insurance have skyrocketed to the point where you're paying the equivalent of 76% of your mortgage every single year just to cover taxes and insurance. And you still haven't paid for a roof replacement, a paint job, or even basic maintenance. The problem: this isn't just one unlucky homeowner. This is Washington state's reality in 2025. The housing market is so inflated that families are being financially suffocated. People bought homes thinking they were securing stability, but now they're being punished simply for owning a house. Property taxes have more than doubled in less than a decade. Insurance premiums are exploding, and the cost of just keeping a home livable, out of reach for thousands. The bigger picture. And here's the most alarming part. This problem, ISN, it contained to Washington state. It's a warning sign for the rest of America. As real estate assessments shoot up across the country, more homeowners will find themselves in the exact same trap. You dainty lose your home because you couldn't pay your mortgage. You lose it because taxes and insurance drained every dollar you had. If this trend continues, millions of Americans will face the same nightmare. Real example: 2018 versus 2025. In 2018, family in Washington state bought their home for $315,000. It wasn't a luxury house, wasn't a mansion, just a normal middle-class home. At the time, that price felt high, but manageable. They budgeted carefully, they signed their mortgage, and they believed they were securing the American dream. Fast forward to 2025, just 7 years later. That very same home is now assessed at $615,000 for property tax purposes. On paper, this looks like a dream scenario. The home nearly doubled in value. If you only looked at the numbers, you'd think the family was sitting on a gold mine. But here's the harsh truth. That higher assessment doesn't put a single extra dollar in their pocket. They didn't sell the home, they didn't cash out equity, they didn't suddenly become wealthier. What it did do is double their property tax bill. Every year, thousands more dollars are now demanded by the state and county, simply because someone behind a desk decided their home was worth more. And the pain doesn't stop there. Add in skyrocketing homeowners insurance, and suddenly this family is paying the equivalent of 76% of their original mortgage just to cover taxes and insurance, before a single dollar even goes toward maintenance or repairs. Think about that for a moment. Imagine you're paying nearly the same amount as your mortgage, not to build equity, not to pay down debt, but just to satisfy tax collectors and insurance companies. The roof still leaks, the paint still peels, the furnace still breaks, but the money you would have used for those repairs is already gone. So while the headlines say housing values are up and homeowners are winning, the reality is very different. This family isn't winning. They're trapped, squeezed harder every year by a system that punishes them for owning the very home they worked so hard to buy. The bigger problem? But here's the real danger. This isn't just about one house or one unlucky family in Washington state. This is part of a much bigger problem that's quietly unfolding across the state, and could soon spread across the country. When home values are reassessed and doubled on paper, counties and cities see dollar signs. Higher assessments mean higher tax revenue. Local governments are thrilled, but homeowners are the ones footing the bill. Families are being forced to pay thousands more every year, not because they earned more, not because they moved into a bigger house, but simply because the system says their existing home is now worth more. And insurance companies, they see the same inflated numbers. They raise premiums, citing higher replacement costs and rising risks. The result is a 1-2 punch. Taxes take a bigger slice, insurance takes the rest, and homeowners are left with nothing. The bigger issue is this: homeownership is no longer the safe, stable dream it used to be. For decades, buying a home meant security. Today, it feels more like a financial trap. The higher your home is valued, the more you pay, and the less you actually keep. And this isn't unique to Washington state. What's happening here could be a warning sign for states like California, Texas, and Florida. The same trend of overinflated markets, skyrocketing insurance, and crushing property taxes is spreading. If nothing changes, millions of Americans will soon be paying more to stay in their homes than they ever imagined. And if you want to stay ahead of these housing market shocks, make sure you subscribe to the Real Estate Scouts. Because what is happening in Washington today could hit your state tomorrow. Impact on homeowners. Now, let us talk about the real impact on everyday people. Because behind every tax bill and insurance premium, there's a family struggling to keep their home. Imagine being a young couple who stretched every dollar to buy their first home. They sacrificed vacations, skipped luxuries, worked overtime just to get that mortgage approval. At the time, it felt like an achievement. Stability, a roof over their heads, a foundation to build a future. But fast forward a few years, and instead of celebrating, they're drowning. Their mortgage hasn't doubled, but their property taxes have, their insurance has, and suddenly every month feels like a race they can't win. The money they thought would go toward fixing a leaky roof or saving for their kids' education is now gone before the month even starts. And what about retirees? Senior citizens who worked their whole lives to finally own a home outright. They thought retirement would mean peace of mind. No more mortgage payments. But now they're getting tax bills that feel like a second mortgage. On a fixed income, it's devastating. Many are faced with impossible choices. Pay the taxes, pay for medication, or risk losing the home they worked decades to own. And renters aren't safe either. Because when landlords get slammed with higher taxes and insurance, they don't absorb those costs. They pass them straight down to tenants. That means rent goes up. And people who don't even own homes are still paying the price for an inflated housing market. This is the heartbreaking reality. Families are cutting corners on maintenance, delaying repairs, or going deeper into debt just to keep the lights on. Homeownership, once the symbol of financial stability, is quickly turning into a heavy burden that's pushing people to the breaking point. Washington State Spotlight. Washington State has become one of the clearest examples of how broken the system is right now. On the surface, it looks like a booming housing market. Homes have doubled in value in less than a decade. Prices are high, and on paper, it seems like the state is thriving. But behind those numbers, the reality is very different. Washington has some of the highest property taxes in the country, and the burden is crushing families from Seattle to Spokane. For many, property tax bills aren't just a small part of their budget anymore. They're one of the largest monthly expenses they face. And unlike a mortgage which eventually gets paid off, property taxes never end. You could pay off your home entirely, and still, the government demands thousands of dollars from you every year just to keep living in it. Take King County, for example, home to Seattle. Property assessments there have skyrocketed, and that's left homeowners blindsided with bills they simply weren't prepared for. And when those tax bills double, so does the pressure on renters. Landlords pass on the costs, pushing rental prices higher and making the affordability crisis even worse. This isn't just a money problem, it's reshaping communities. Families who've lived in their neighborhoods for decades are being forced out. It's not because they sold their homes, but because they can't keep up with the tax burden. Longtime residents are being replaced by wealthier buyers or investors, changing the fabric of entire communities. Washington State has become a warning sign, showing us what happens when a housing market inflates too quickly. And when local governments depend too heavily on rising property values to fill their budgets, if it can happen here, it can happen anywhere in America. National connection. What's happening in Washington State isn't just a local story, it's part of a national trend. Across the country, homeowners are facing the same pressures: inflated property assessments, rising taxes, and skyrocketing insurance premiums. Take California. In cities like San Francisco and Los Angeles, home values have jumped dramatically. And even though Proposition 13 limits property tax, hikes for longtime owners, new buyers are crushed under massive tax bills the moment they close on a home. Or look at Texas and Florida. These states don't have an income tax, so they rely heavily on property taxes to fund schools and local services. That means when home values rise, taxes soar even faster. And with the added hit of insurance costs, especially in places hit by hurricanes, wildfires, and floods, the financial weight on homeowners has become unbearable. Even the Midwest, once considered affordable, is feeling the ripple effect. Cities like Denver, Minneapolis, and Chicago are seeing the same dangerous pattern. Homes valued higher and higher while ordinary people struggle to keep up. This is the national connection. The warning that Washington state isn't an isolated case. It's a preview of America's future if nothing changes. The dream of homeownership is being quietly rewritten into a nightmare. Instead of building equity, families are pouring their paychecks into taxes and insurance. Instead of stability, they're living with constant fear that one reassessment, one insurance spike, could push them out of their homes. And this is where the bigger conversation begins. If Washington is the test case, then every state in the U.S. needs to start asking, what happens when the cost of simply owning a home outpaces the ability of ordinary people to pay? So what does all of this mean for the future of homeownership in America? It means that the dream is changing. For decades, buying a home was the ultimate goal, a sign you'd made it, a promise of security for your family. But now, homeowners aren't losing their houses because they can't pay the mortgage. They're losing them because of property taxes and insurance. That's not just unfair, it's dangerous for the stability of the entire housing market. Washington state is a flashing red warning light. It shows us exactly what happens when property assessments balloon out of control, when insurance companies raise rates without limit, and when families are left holding the bill. And make no mistake, what's happening there could soon be happening in your neighborhood, your city, your state. But here's the good news. Information is power. The more you understand what's happening in the housing market, the better prepared you'll be to protect yourself and your family. And that's exactly why we created this channel. If you want real stories, real analysis, and real updates on the housing market before it hits your doorstep, then make sure you hit that subscribe button and join us here at the Real Estate Scouts. Not just reporting numbers, we're uncovering the truth behind the headlines. And trust me, you don't want to miss what's coming next.